This is Ken Lake with MAC's Technical Market Update for Thursday, December 29th. I'm going to concentrate tonight on March wheat solely. We have some customers who either own some 2016 wheat crop in their bin at home under a DP or basis contract with our elevators, or may even be long some March wheat calls that this information could be useful for. To set the stage, we'll take a look at the world wheat ending stocks and stocks to use ratios. I mean, anybody that's looked at wheat at all knows these numbers, and they're bearish. I mean, we're approaching a 30% stocks to use ratio in the world. In the last 2 months, USDA continues to add production to the world numbers here, and these numbers are on the uptrend, and nothing bullish here for wheat from a world standpoint. If you'd switch to a U.S. view, you're going to see that U.S. stocks to use ratios are 50%, meaning that half the crop is left at the end of this year when we harvest next year's crop. So again, nothing bullish about that. One thing we can hold on to here at Eastern Corn Belt as soft red wheat growers, starting to see soft red production fall. You know, a typical soft red crop for Eastern Corn Belt could be 350 to 400 million. We've been as high as 600 million, or low as about 250. So this trend is clearly lower locally. We've seen acres down fully a third from a year ago, and if we just get to normal yields, we'll probably have about half the crop we saw last year because we experienced extremely good yields a year ago. So speaks probably more to basis than it does flat price, futures. We have seen soft red basis improve here in the Toledo district since harvest, so that will likely continue. When we start talking about pricing ideas for the March contract, notice I've drawn retracement from last summer's high of about 480 to the recent low of 390. Clearly, long-term trends down, short-term trends down. Nothing friendly about this except the fact that it's, in relative terms, pretty cheap stuff. We think the lows are in for this contract, but we thought that as well when we put this 405, 410 floor in, and yet dropped another 30 cents to 390. So we can't be sure that that's happening, but with acres down and demand fairly decent, we think the lows are in for this contract. Those who are long March futures in one way, shape, or form should target this 425 to 435 range to eliminate that long position and take your money and run.